Let me welcome in Shanay Shah, Director at Shalby. Shanay, good morning and welcome to the show. Operationally, a strong quarter is what we've seen. Are you happy with the numbers? Because good growth in terms of profitability, margins have expanded. Is this sustainable?
Good morning to you and all the viewers. I think this has been a very good performance, and we are very happy across all fronts. So we have seen a kind of a healthy growth in the top line. We have also seen a slight expansion in the margins. And besides that, this has happened even after our doctor costs have risen 22%. So, we have invested heavily in doctors over the last 6 to 9 months, and we will see the benefits of this in the next few quarters to come.
Okay. So taking this into consideration, Shanay, are we expected to maintain this kind of numbers and run rate in the remainder of the quarters as well?
Yes. So, the quarter four of FY19 was a one-off quarter for us. Having said that, the Q1 performance this time can be assumed as the run rate going forward for the year. And of course, whatever growth will be achieved over and above this will be, basically more than what we have already achieved in Q1. So essentially, I can say that, we will be able to maintain this kind of a number going forward.
I'll interrupt. 500 crores in terms of revenues and 100 crores in terms of profitability in FY20?
Well, to be honest, we are not giving any guidance at this point of time, but
Will that
honestly
be your
speaking,
aim?
this
Will that
is
be
the
your
run
aim?
rate. Sorry?
Will that be your aim?
Well, aim is of course more than that, and we think that we will be able to, kind of sustain this kind of numbers at least for the next 3 quarters.
Okay. And what's the kind of
Yes.
capex spend looking like for the remainder of the year?
So, we basically have a capex of 10 to 15 crores this year. And having said that, we are a net cash company, so we are sitting on 15 to 20 crores of cash, and we will be accumulating here more towards the end of the year. And essentially, basically at this point of time, we do have debt, as I said, but our net cash is much more than, the debt we hold on the books.
Correct. And beyond that, another scalable healthcare model that you're following is with regards to focus on orthopedics, which draws almost 55 to 60% of your revenues. Is this the strategy that is expected to continue as well, or are you expecting to add, few more segments of business?
Right. So, we are already the world leaders when it comes to orthopedics. We control about 15 to 18% of India's organized volume. And we hope to continue this kind of market share in this segment. Having said that, there are a lot of other areas where we are focusing, where we have already seen a huge uptick in numbers over the last 12 quarters. So the other segments we are focusing on are oncology, neurology, dentistry, cardiac, and basically high-end transplants like kidney, liver transplants, heart transplants, etc.
Okay. And with regards to where occupancy is concerned, how is that looking like? Because if we talk about your revenues for hospitals above 6 years old, they've grown by around 5%. Hospitals which are between 4 to 6 years old have remained flat, whereas 2 to 4-year-old ones have grown by 37%. Now, taking this into consideration, are you expecting improved occupancy? And how important is a factor, especially in terms of Ayushman and My Yojana schemes that have been announced? How big a factor is that playing?
So, I'll answer your first question. Essentially, what has happened is, if you look at the numbers, yes, I agree that in Q3 and Q4, the numbers were slightly subdued for Indore and Jabalpur. Having said that, if you see the growth in terms of, Q4 to Q1 this year, you will see that in Indore and Jabalpur, that is the 4 to 6 year units, we have seen a 25% increase in the number of surgeries done, a 15% increase in the outpatients, and a 15% increase in the outpatients and in the daycare. So essentially, we will see that this outpatient growth and this inpatient growth will translate into numbers in the following quarter, that is Q2. So essentially, we will be seeing the growth on that front. Having said that, even the 6+ years units that are, the mature units, have shown a significant increase in terms of the outpatient numbers and the daycare numbers that we are doing. So again, we will be seeing a big translation of numbers, into the coming quarter.
Right.
Having said that, the 2 to 4 year units have done very well. They have shown a healthy 37% growth, and we hope to continue those kind of numbers. And in the units which are less than 2 years old, we just have Mohali. And basically, we are happy to say that, it's just 1 year of operation for Mohali, and we are already close to break even, and we are close to operational break even, when the industry standards are, kind of to break even between 2.5 to 3 years.
Right. And very lastly, Shanay, if I have to talk about the EPS profile as well, FY18, it was around 3.8 rupees per share. We moved down by almost around 22% to 2.9 rupees per share. Taking FY20 into consideration, what's the kind of number that you're looking at in terms of the EPS growth? Do we see another 50% jump from here on, taking the entire, growth into consideration?
Yeah, so I can definitely say that we'll be seeing a very healthy PAT growth from last year. And last year, it was also because, the 2 to 4 year units were all just 2 years old, and, they had just broken even, so they were not contributing much to the earnings. But having said that, we will see a growth in the coming year. The only thing is that last year, there was a heavy tax liability also that had come in. So basically, because of that, the PAT was slightly subdued. So essentially, I can say that, this year we'll be showing a very healthy growth in terms of, the PAT absolute number.